Hi everyone, I'm Tushar from SquarePeg Capital. You know, while digital is a conference about the cutting edge, expanding the imagination about entrepreneurship and about technology, and so I think it's only fitting that we spend some time now talking about imaginary creatures as well. Unicorns, decacorns, dragons. If you don't know what all these things mean, in a tech investing context, you can look it up online. The topic today for us is the after effects of the investment boom. Where are these unicorns? And I've got a great panel here. I've got Raymond, I've got Khairul and Melisa to talk with about this. And guys, I'd love for you to introduce yourselves to the audience, a bit about what you focus on, what your mandate is. And also I'd love for you to share maybe a provocative thought about this topic. So I'll get started. So I'm Tushar, I'm a partner at SquarePeg Capital. We're a generalist venture fund with more than $500 million US under management. And we invest at the Series A and B stage across Southeast Asia, Israel, and Australia. And my provocative thought for this panel is that I think the investment boom is only just getting started. I think we're in day one of the investment boom in Southeast Asia. I think there are going to be more billion-dollar companies produced in the next 3 years than they were in the last 6 years. And finally, and maybe a bit counterintuitively for you, I think the best way, if you're an entrepreneur, to not create a unicorn is to set out with the primary goal of your business being to create a unicorn. And happy for you guys to agree or disagree with me, but I'd love for you guys to introduce yourself. Melisa, maybe we can start with you.
Yes. Hello, everyone. So my name is Melisa. I'm from East Ventures. We are an early stage venture capital firm, basically investing across Southeast Asia, primarily in Indonesia. We started investment back in 2009, so it's been 10 years of investments. Pretty agnostic in terms of the sectors. We've seen when we started, a lot of like the first generations of companies are B2C. We've seen how the trends migrates to B2B, and currently a lot of it's like B2B2C model companies. I've been in the firm for nearly 5 years, and mostly we work alongside with the portfolios in Indonesia. Sectors are, although agnostic, there are several ones that we are quite strong at. It's an e-commerce, payment, logistic, SaaS, education, media, and advertising as well. A quick thought about this is that, well, a lot of people use many terms like unicorns, decacorns, or whatever corns to sort of like establish like where the positions of the companies within the regional map of the market. And it sort of like rings back to why venture capital invests in a company anyway. And the end goal was that to reach $1 billion valuation. This rings a bell. When I really first started in the firm, we always talk about it like, oh, a company has to reach like a 1 billion valuations for it to be successful. But along the time, it was like 2014, and then the jargon starts coming out. But my viewpoint changes across the time. Is that to grow a company, there are many things that you need to take into account. Like, number one is mainly on how the trends look like. Is it the global trends versus the domestic trends? So these are the factors that when the entrepreneurs started, like they were like envisioning to see that this is why they want to go for. But of course, the market moves in the certain dynamics, and it changed. Second was in terms of the ecosystem infrastructure, and it takes a lot of effort. We talk about like whether the government is ready, whether the infrastructure layer of whatever it is we are talking about, either it's the logistic or it's the supply chain, or it's the payment infrastructure. So it takes into account whether a company can derive a value in a faster and possible way. And the third factor, which I've seen current, is that the FOMO factor, that people are afraid of like losing out a deal, and this goes consistently along the time as well. So where are the unicorns? I feel they're coming in, but one of the things that people would like to closely monitor is when are they coming, at what time they're coming, and whether a certain type of investors can afford to wait until they become a unicorn, or they would need to like exit or go on the exit mechanisms before the company go into unicorn.
Hi, I'm Khairi, partner in Gobi Patners. We're a 16-year-old fund that cuts across China, Southeast Asia, and now we're spreading our wings to the Middle East. We are a multi-stack fund, I'm doing Series B and C, but my other colleagues are doing all the way from seed to Series C. What I want to build on what Melisa has said is that for me, as sexy as unicorns are, Gobi are more interested in having a 10x returns on investments rather than whether you're a unicorn or a cockroach. That's one. Secondly is that my thoughts for the day is that, if you think about it, rhinos are just another unsexy, fat version of unicorns with their horns. So, yeah, think about it. Thanks.
Hello. Yeah, I think I agree with all of you. I'm Raymond Hall. I'm partner for Kejora Ventures. Kejora is a VC out of Indonesia, and this is the first time they reached out to Malaysia to form a partnership. And together, we brought along Intervest from Korea, and as a co-GP fund, we have a US $100 million fund for Series B, targeting Southeast Asia. So for those who know me, this is the second time I joined the dark side, be the VC again. Right? I used to be entrepreneurs. What happened is 12 years ago, I listed 2 companies, and I was invited to invest as an LP in the small fund, outsourced fund of MathCap, Questmark. So 2008, post-crisis, there were not a lot of opportunities. The fund size was small. It was challenging, but we learned a lot. Now, after 2018, May 9, right, Malaysia 2.0, I asked myself, what can we do for our new country again, our second independent day? So Dr. Siva asked me, why don't you come back national service again? Security Commission asked for 1 billion VC fund allocations. I said, okay, if I were to do that, I would do something different. So I invited my Emergent team, Andy Zen and Sebastian from Kejora, come over here, and there you go. We set up this 100 million fund together with our Korean partners, and we are ready to serve. Thank you. As for the unicorn, I agree with all of you.
Great.
Thanks.
Okay. Well, Melisa, you spoke a lot about, understanding the infrastructural elements, the thematics in play in the markets, the fundamental building blocks on which you build a business. So do you think this panel is actually about the wrong thing? It focuses a lot on, the status of unicorn, which is a valuation metric. It's an output, not an input. Knowing a bit about East Ventures, you guys have delivered great returns without necessarily investing in many unicorns. So do you think it's the right thing to be talking about? It's the right thing to focus on?
Many companies, when they start, of course, the idea, like the great entrepreneurs, when they come out working from big firms, like let go of a big job that they have to take a risk, they have big aim, of course, to actually build the unicorn company. And every time, everyone would definitely talk about that. But essentially, elaborating what I was talking about, like when you go and jump into market, there are external factors it's uncontrollable. To take into, like for example, right, like someone who thought that, okay, I'm gonna like build this company quickly, and they made a projections on like targeting on probably acquiring a company through certain strategies that has been very well thought of. What they weren't able to predict, for example, one thing very for sure is the competition. So you thought you're coming alone, but in the market, there's some other guys who are actually going and running through the same path as well. So, like you don't know. At the end, in what happens on the ground is different case. But when they started off, everyone would start off like bringing in the big vision, but understanding that on the ground there is going to be a change. The spirit that we take care of is that, of course, everyone has to be enthusiastic and everyone has to be motivated to work on something big. Either the investors, either the founders themselves. It's good. It's always important to put it on the map. But the parameter is that even if it doesn't go to that way, like as you say, the importance is making profit anyway. So the next question is at every point of situations, there's no like one solution fits all. Like when one situation kicks in the company, like what is the best situations to go for that? One of the things that sometimes in the junctions in between, an acquisition offer come on the table. Like, do you want to take it, or do you want to like go continually fundraise and making sure that you burn money and then go to reach up on a certain valuation? So I'm not saying that, there's a one question that fits all. It depends also like for a certain entrepreneur, like how how are they behaving at a certain period of time when these rounds actually happen? Do they still have enough fuel to go forward the same way when they started off or not? This panel is interesting in a way that do we still need to focus on only that? Probably the answer is no. But the spirit from the beginning, it's important to keep a goal that's big enough for everyone who takes part in the deal to be motivated to continue on.
And just to build on what Melisa said about profitability, I think for me personally, it's okay not to be profitable. It's just that we just need to see the light at the end of the tunnel to be able to see the path to profitability at the end of the day. Having said that, although I mentioned about rhinos and unicorns just now, but having unicorns in this part of the world is a signal to the market. It's a gauge on the sentiments, and it will attract more capital, particularly from the LPs, to come into this part of the world.
So that's actually a really good point. Maybe let's stay with you, Khairul. So you make investment decisions every day at Gobi. You've got money to spend. Actually, I think I've got money to spend. We've all got money to spend. So do you think the investment boom is done? And do you see or think that there's a slowdown in unicorns emerging in the region?
Well, I would like to be more optimistic. I think slowdown is not the word I would describe the situation. I think I would say there's a couple of unicorns in waiting. They're just about to break free, so to speak.
Sounds like it's going to be a stampede.
Yeah, I think that happens, right? Once the floodgates are open, then you'll see more than a couple, right? Now, just to go back to your question on the investment cycle, right? I think, yes, investment has remained more or less the same. I think if I'm correct, when I look at the data for last year, 2018, there were about 10, 11 billion that has been invested in VC around Southeast Asia. But this time around is more concentrated. A huge chunk of it goes to maybe like less than 10 companies. So this is partly because I think a lot of the earlier stage investors have moved on to Series B and C. So I think the challenge here is actually to create a runway for unicorn to fly off, right? The runway must have at every stage of investment a strong depth and width of a pool of investors. So with investors moving from seed and they're moving on to A and B and C, so forth, they leave behind a gap as well. So ideally, that runway is always there. It's being filled up by other players so that anyone can actually take off from seed to all the way to a unicorn.
I would like to add on to that on the investment boom slowdown. I think the feeling is relative, right? Depends on timing, depends on whether you're Series A or B. We had to look back the past 3 to 4 years, the investment boom, we have generated a lot of Series A company. I look at the report from Traxon this morning, and then there are about close to 600 Series A out of Southeast Asia, right? Now look at it, 600 companies, and out of that, maybe 10% going to Series B right now. There's still a lot of companies, right? And there's some of the VC who have done Series A, they move on to Series B. So I heard out there some of the Series A says, hey, we are worried with, for example, in Malaysia, right? There may a lot of, like Gobi, ourselves focusing on Series B, Golden Gate Ventures, Series B. And so the Series A player is going to say, hey, maybe the funding is going to dry up. But even that, I look across the border, and we look at certain region, the Series B players, they are going out and asking for a lot more money at even higher valuations. So there's a market breather. I think they're taking a breather right now because the LP and GP, foreign one particularly, they are asking, the valuation is more expensive right now, and let's be selective. At the same time, there's also a question of this Uber IPO setting a price reference for our own unicorn of Southeast Asia. How much Grab and Gojek, right, and Tokopedia and Bukalapak, how much would be their valuation at the point of the IPO? So if there's a setback in terms of the valuation of Uber, Southeast Asia's unicorn probably would fetch a lower valuations. And if you recalculate and re-engineer the numbers, right, then it's reasonable for the VC to say, hey, check, let's have a look, right? So that probably caused a certain feeling of a slowdown recently in this market, right? And so, yeah, that's another counter view out there. But as a whole, I don't think the investment boom is over. Your question to me, right? Because, for example, my Korean partners, right? South Korea right now, they have a South policy, right? South policy as in less diversified away from China, I think due to all this US-China trade war, right? So they actually want to bring more money into Southeast Asia. It's just a matter of time, right? More money will come to this region, all right? So, yeah, that's my take.
Just to build, just one thing to share on his comments on financial capital is coming to Southeast Asia. I do agree, but I think to build a unicorn requires more than just financial capital. There's the mentor capital, the network capital that is involved. And I think because of the concentration of capital in the current unicorns and the near unicorns, because of the lack of, the lack of talent pool, it means that it's slightly concentrated over there. But I think as these unicorns have a liquidity event or monetize somewhat through secondaries, that mentor and network capital will be recycled, and this guy will start their own unicorns later on. So I think it's a process. I don't have any answer how to expedite the process, but I think it's something that I think all the ecosystem builders have to think of.
So you mentioned before there are a few unicorns in waiting behind, and someone's going to open the floodgates at some point. There are also several unicorns that are beyond those floodgates and are running around with pointy horns trying to stab people. Do you think that there are going to be some big casualties from this? And do you think that what do you think the region, what would it mean for the region if one to a few of the unicorn players that are marquee names go down? Like, what do you think the regions can survive that?
Well, this is a tricky question, right? I mean, there's always this talk that if you are big enough, your funder will not let you fail, right? And then, of course, the funder behind all these unicorns, they are really like mega fun, right? So I think, in my point of view, I'm optimistic. Really, when you cross the unicorn, right, they are so like, probably you are like Series G and H ready, right? So the fund will keep coming in. So I don't think they will collapse. It's just a matter of sustaining further, right? They already built their territory, the market share, and all these things, right? So I don't believe that there will be a unicorn level casualty.
Anyone disagree? Anyone think there might be a couple of unicorns that go down?
I think it depends on what you define as casualties, right?
I mean in the classic venture sense, going to zero.
I think at the end of the day, even if there are casualties, the mentor and network capital has been built up and it can be recycled into the ecosystem. I think the ecosystem is strong enough now to withstand such shocks to the system. And, sometimes creative destruction may be good for Southeast Asia.
To add a few points, maybe even if we analyze further to sample unicorns that they are, like these companies are in the industry where it's not the industry that only one player would take it. So like Grab, when Uber and Grab, like when Uber was gone, like many people argue that it's a monopolistic market. So I think that on top of that is like, these are companies that's in the industry that you can have like a one or two big players in the market, and given that there's already much funding going on, it's very hard to not let the company, it's too big to fail. But second, like I agree, and there needs to be a recycle of the capacity building on itself. Like it doesn't have to be like, what we've seen is an overprice in the talents and how they build. Like it's not supposed to be that expensive, it's because there's a limited supply of it. So the challenge of it is that while the positive trend is very big on this region can produce much more unicorns as possible, but one of the big homework
in order to support that notion was that we have to make sure that the capacity, especially the human capital, we are able to structure in a way that's possible for all to actually level up. So it's not like too much money in the market, like you are paying for nothing, but there should be a capacity building where the business models are sustainable, that they are worthy to be called like unicorns, not just by financial means, because money coming in. Yeah.
Unfortunately, we're out of time, and that red screen is really distracting, so I think we should vacate the stage and let the next act come on here. Thank you, everyone. Please join me in thanking the panel.